Hey everyone, and welcome to another episode. So, there is a lot to actually unpack today. It's actually gonna be a special, so it's gonna be a part two. So, part one was actually on everything on the US stock market, what's happening on the US stock market, and this is actually gonna be part two. So, it's gonna be on tariffs. And yes, tariffs has been the talk of the town. So whether you've been tuning into the business news, whether you've been tuning into regular news, whether you've been tuning into politics, you've just everybody all around has been talking about tariffs. And so it raises the question, how does tariffs really affect stock prices? So I'm actually going to go into looking at how the tariffs really affected the US economy, or how it would affect the US economy, how the tariffs had affected the stock price, and I'll also be looking at the value of the US dollar as well too. So let's jump right into it. So right now, the current president Donald Trump had actually implemented, or was about to implement, tariffs on three of the major trading partners in the United States. So that would be Canada, Mexico, and China. So Canada and Mexico actually were actually to have a 25% tariff included on their items. So tariffs really are just fees that are charged from on the importing country to actually have your goods incorporated into that country. So to further understand it, let's say that you are importing avocados from Mexico, and as it stands right now, let's say that there's a 25% tariff fee on the actual imports of these avocados. So for every, and let's just say that the avocados cost $1. So for every $1 that you pay for the avocado, it actually would now raise the price by 25%. So that would be $1.25. So whereas you'd be paying $1 for an avocado, you're now paying $1.25. And that is actually the standard cost that you'd actually pay. But in reality, the actual cost that you'd be paying for the avocado would be about $1.30, $1.45, because there would be actual additional fees that would be added on. So even though the tariffs by right should only increase the price by 25%, so in this case it would be 25 cents, based on just consumers and businesses overall, and persons really trying to make as much profit as they can, and maybe just the additional paperwork that they would have to actually incorporate, maybe the additional labor that they would actually have to pay just to actually have these actual tariffs and additional steps included in that process. Now it would actually raise it by about 30-45% or even more. So it should be 25%, but it would actually raise it a lot more. And the whole significance of the tariffs was just really between the countries. So as President Trump says, to incorporate fair trade. So the actual share price or the stock market actually fell since the actual tariffs were announced. So with the tariffs being implemented, the actual stock market, the S&P 500 and the Nasdaq both fell. So the S&P 500 actually fell by 44 points, or 73 basis points, while the Nasdaq had fallen by 1.77%, or about 231 points. So 1.77%, 231 points. So what does this really mean? So this shows you that there was actually a direct correlation between tariffs and the stock market. And by Tuesday, so by Monday afternoon, Monday evening, there were actually ongoing negotiations between Prime Minister of Canada and the President of Mexico, and they actually had agreed on terms and conditions which President Trump had shared, he would put a 30-day pause on these tariffs. So Canada and Mexico actually had agreed to increase the border patrol. So they would send greater troops to the border, and they would actually crack down on the immigrants into America and also the drug trafficking that occurs. And we all know that America is the largest immigration destination in the world. So there are persons from South America, persons from North America, persons from the Caribbean, persons from Africa, Asia, all over the world that immigrates into America every single year. And so President Trump really has decided to put a crackdown on this. And so this raises the question, were the tariffs really something which President Trump wanted to do, or was it just an additional negotiation strategy in terms of getting these countries to actually cooperate in having the immigration and the border controls tightened and actually having the borders much more difficult for persons to immigrate illegally into the United States? So that really raises that question. So as it turns out right now, the stock market actually had went on an explosive run by Tuesday. So the futures market, the options market, and the regular S&P and Nasdaq indexes all saw increases by Tuesday. And so with these increases, you would naturally think that persons would be more confident. But if you actually check the CNN's Fear and Greed Index, you realize that they were actually in a fear mindset up to Wednesday, this February 4th, 2025. And so even the VIX volatility index, which tracks the options market, actually shared as well too that the points that were given to the actual market was actually at about 17.21, which was just slightly down from the actual start of the year, which shows that the market is still in a fearful state, and so investor confidence is still not at that level that we would want it to be at. So what does all of this really have to do with the stock market? So right now we are expecting that there's going to be even greater volatility in the markets going forward. So the next few weeks, the next few months, there's going to be greater price swings. So there are going to be greater price increases and also greater price decreases due to the volatility that happened. And if you've been following this channel for a while, you know that what we always say is that volatility is where money is made, because when investors are fearful, when investors are not confident, they tend to panic sell and they tend to overspend. So with that, the swings actually become a lot more, the swings become a lot greater, and so this increases the level of volatility, which means that you would be able to actually be picking up on great deals as the volatility increases. And some investors thrive off the volatility. I personally love when the market is this volatile, because I would just be putting funds on the sideline, just waiting and in anticipation for the markets to fall so that I can be picking up units in companies that I already have to actually get them at greater purchasing prices and prices which I may not have had if it were not for this volatility. So volatility would actually result in prices being less than their actual book value or net worth. So what that means is that the prices, you'd actually be getting stocks at a bargain. In its essence, that's really what it is. So the next question is the US dollar losing its value? Now, based on the actual exchange rates, so the exchange rate for the British pound to the US dollar has actually been relatively flat from the year to date. So it's at about $1 that gives you about 0.8 British pounds. And similarly with the euros, it's actually about $1 gives you about 0.76 pound euros. And with the Canadian dollar, there's very little change as well. And with the Mexican pesos, it also has been declining for the previous month. So based on looking at the exchange rates over the previous month up to present, all these additional currencies have actually either remained constant or actually strengthened against the US dollar, so meaning the US dollar actually got weaker compared to the other currencies. So based on that, the US dollar has actually lost value over the previous month, which shows that with the volatility that has been happening with investors lacking confidence, persons in the forex market are also a bit worried as well as to what is happening, and so they have decided not to really increase their holdings in the US dollar, but probably go with other trading strategies and other currency matches. Now, interestingly, the US dollar to Chinese yuan actually has seen a really large dip since January 23rd, 2025, and up to about the Monday when the tariffs were actually implemented. So the dips were down about 0.11 points, or about 1.5%. So that was a dip between the US dollar and the Chinese yuan. And this will just show that the yuan actually wants to actually have their currency devalued. So they have been weakening significantly over the last month. And so as this really occurs, and as we look at everything that's happening in the markets, the most interesting interesting point is the gold and silver spot markets. So the gold markets right now are actually, the spot price per ounce is currently at $2,867. So it's up about 0.86%, while silver on the other hand is down about 0.05% at $32.31. And interestingly, the gold actually had increased over the past 30 days by 7.24%, the past year by 39.68%, and over the past 5 years by 81.64%. And silver on the other hand has actually increased by 7.34% over the past 30 days, 20.43% over the past 6 months, and 44.24% over the past year, and 81.71% over the past 5 years. So very similar increases over the time periods for both actual commodities. What I love with gold and silver is that Kiyosaki calls it God's money, and this is because he's saying that gold and silver are actually created in the earth and it cannot be created by man. So it's only found in the earth by actually doing work. And if you've been following up Robert Kiyosaki, you've been listening to his Rich Dad radio show, you would notice that over the past 5-6 years, he has been very strong in terms of his acquisitions into gold and silver. He has not made any financial advice in terms of telling anybody to purchase gold or silver, but he has shared with each person the facts and why gold and silver should be held in your portfolio. And silver right now has actually started picking up, because as Kiyosaki always says, silver was severely undervalued. It was actually down about 45% from its all-time high. And he said that the only way for silver was to go up in the future. And it's shown here, silver and gold have increased by similar amounts over the similar time periods. And so this just goes to show that as gold and silver increases, the US dollar also is losing its value across currencies. So the exchange period between different currencies and pairings with the US dollar has been devaluing. So is it a case that gold and silver are getting more expensive, or is it a case that the US dollar is just becoming that much more devalued, that these actual commodities and assets actually increase much more than one would expect? So that's really all that I have time for today, guys. Thank you so much for tuning into this episode. And as previously shared in the beginning of the video, I will tag part 1 at the end of this video, and that is what's really happening in the US stocks right now. So look out for it at the end of this video, part 1, and this is part 2, so watch both and get that full education. Will I do a part 3? I'm not sure as yet. Possibly. It depends on what happens for the remainder of the week and into next week. May do a part 3, may do a part 4, may just end it at parts 1 and 2. But that really is it. So thank you guys so much for tuning into this episode. Just if you like this content, I ask that you give us a thumbs up or a heart wherever you consume this material. Leave any comments down below. I want to hear from you all. I love when you get in touch with me. And also subscribe or follow to this channel so that you do not miss out on any new episodes as soon as they are released. Until next time, take care. Love you all. Bye.